Hey, what's up, folks? This is Jesse with Keeping It Real Finance channel that always has your back and tells it like it is. Well, today's video is all about 5 bearish indicators that I see in the chart, but why I'm still bullish. So I wanted to share this video because it looks like the sky is falling, all the chicken littles are going on out there. But really, I want to highlight why this is one of the greatest opportunities you can possibly get in any market, and why I'm taking advantage of that, all right? So that's what we're going to be talking about in today's video. I'm going to share with you some different chart things, and then I'll be telling you why I'm so bullish on crypto in general moving forward. So it should be a pretty informative video. If you enjoyed today's video, make sure to hit the like button. If this is your first time to the channel, make sure to subscribe. And if you click the bell, you'll be made aware whenever I post time-sensitive content just like this. And now, let's get it going. All right, so I wanted to start this video off by first showing you all what I'm seeing in the Bitcoin chart for today. This is January 22nd of 2022, all right? So the first thing that's going on here is we had the dreaded death cross occurred roughly around January 10th or 11th or so of the 50-day moving average crossing through the 200-day moving average. So this is very bearish. So in a bullish chart pattern, it looks kind of like it does right here, where we've got the red line. This is the 20-day on top, the 50-day in the middle, and the 200-day on the bottom. Well, when these two drop through here, those are bearish indicators. We had the 20-day drop through right about, let's see here, December 20th or so. And then at about January 10th, we had the 50-day drop through the 200-day moving average. So that is known as the dreaded death cross, and that is an absolute bearish signal for the market. All right, now number two, we had a Bitcoin breakthrough support at 40K. This happened just yesterday, as you can see here with the red bars plummeting downward. That's what occurred. That's why it sort of dropped off a cliff. Then on top of that, we had the only volume that we're showing is basically red volume, right? So this is selling, and or it could be liquidations also. So if you notice here in the volume, you can see right about July or so, we had a baseline drop off in the volume, and it really hasn't returned since. And something else that I've seen that some other channels have talked about is usually when the whales want to tank this market, they'll drop it, and then they really pull it down much further than you'd ever expect to kind of get to that max pain point, right? Well, that looks like exactly what they're doing right here, and that's when those liquidations occur for those leveraged traders, right? Now, number 4, we've also got the RSI here that's indicative of market behavior. That's basically just been plummeting downwards. And then lastly, the market cipher, which I like to look at regularly. I always have this indicator turned on. And what it shows is money inflow and outflow here in the green or red waves. So you can see that when we had that last run up, we had a money inflow coming into Bitcoin all the way up until right around here. Let's see, what's that, about December 7th, 8th, 9th. And then we started to have money outflow after that. So that is this red wave. So follow the money, right? The money is flowing out right now. And that's why that is our number 5 bearish indicator in today's chart. All right, so you're probably sitting there saying to yourself, okay, Jesse, you just showed us the chart on why everything is so bearish. Why on earth would you be bullish right now, right? It seems kind of counterintuitive, but it's really not. And let me sort of explain my rationale. So number one of the big things that's tanking the market right now is this Russia FUD. That's fear, uncertainty, and doubt, and it centers around Russia outlawing crypto and crypto mining, all right? Now, if you really think about it, Russia kind of follows a similar governmental framework of China, right? So China is a communist country, so is Russia. They basically have to control the narrative, they control the news, they have to have all of the control. That's really what it comes down to. And when you have something like crypto that nobody controls, well, it doesn't really jive with it, right? So somewhere like Russia, somewhere like China, what would make a lot more sense is a CBDC. That's basically their own digital currency. I could see him doing that at some point, as well as, the government may end up mining or doing whatever they're doing in the background, buying this up, but not letting the citizens do it. So that's kind of what I think is going on here. They have to have the control, and in the world of DeFi and decentralization, they don't have any. So why wouldn't they make it illegal, right? And you got to think about that for any other countries around the planet that follow that same kind of governmental framework, especially with communism, that why on earth would they let the people have exposure to a technology, to a way to make money, to a currency that the government has no control over? Well, the answer is they wouldn't. And so obviously they made it illegal. So, does that kind of deflate our balloon a little bit? Well, yeah, of course it does. We got to be honest, and we got to admit that Russia's a pretty big country that, has a pretty big influence in crypto. So yes, this is a big deal. But at the same time, is it unexpected? Not really. All right. So that's the first thing I wanted to say. Secondly, and this is even more important, and I want to bring this up because I got a comment the other day on one of my recent Bitcoin videos where somebody said, well, this didn't age well. So let me go ahead and respond to that. So first of all, what you can do when the market goes down is dollar cost average, okay? At no point have I ever said to anybody, hey, go ahead and, sell your house, take out your life savings, dump it all in tomorrow. No, that's not what I'm communicating. That never has been, all right? What I am communicating is that when the market goes bearish, you really don't know how long it's going to be bearish for. It could be bearish for a month. It could be bearish for a few weeks. It could be bearish for 6 months, a year, all right? Now, the key thing here is that when it's bearish, when those EMAs go bearish, like I showed you in the beginning of this video, that's when you turn on your dollar cost average. And it's as simple as like $10 a day into whatever positions that you want to build up. And the whole time those EMAs are bearish, you have your dollar cost average going daily, if possible, okay? You don't need to be a millionaire to do this. And the reason I want to highlight this is that this is where all of the traders, especially in the Bitcoin world, have really made their money. This is how they became super wealthy, okay? The running joke on CT with people is, they're kind of just numb to it at this point. And there's a really funny GIF out there of Mr. Bean riding a roller coaster, right? No facial expression whatsoever. And that's kind of what's happening here, okay? So really the strategy is to do that dollar cost average when everything goes down. I personally am not a leverage trader. I've tried it. It just isn't for me. I don't know. I can't get through to that world, okay? So what I do is I simply do the dollar cost average when things go bearish. Ultimately, it will flip bullish again. Whether we have a cycle or not, it's going to happen. Now, I'm going to fully admit here, I'm not just going to be one of these LARPers that goes along with this and tells you how much money I've made and whatever. I'm not going to do that. Is my portfolio down? Yes, it's down, just like everybody else, okay? Everyone's portfolios are down. Everybody really thought that this would turn around sooner, right? There's so many different chartists out there that look at those levels and they say, oh, it's going to bounce because it did it last cycle and it did it the cycle before. Hasn't bounced, right? They just kind of pull it down further. And that's what I was saying in the beginning of this video, that they really like to, the whales in particular, give you max pain. They pull it down as hard as they possibly can. But the truth is that a loss is only a loss if it's realized. So if you never realize that loss and you simply do the complete opposite, which is buy when the market is down, you have all of the control. And that's the most important part. The moment you sell, you're giving away all of your control. But if you continue to buy in very small amounts, this is where you can build up a substantial portfolio. They call this stacking, right? So you're stacking Satoshis. That's the way the Bitcoin maxis refer to this. So stacking Satoshis, right? So that's all you're really doing, is you're stacking when everything is down, and then when it goes up, you're in a great position. Now, there's different ways to, be ready for this kind of thing. One thing I've been thinking about, that I really haven't communicated too much, is the stablecoin idea of having stablecoin reserves, and if something goes up, you could peel off profits, put into stablecoin. You could absolutely do that. But something else I'm really starting to think about is that maybe you need just a daily amount that you're putting into a stablecoin, and you're not putting it in there to make any money. You're simply putting it in for the opportunities like this. So then you'll have that huge pool to draw from for your DCAs when you need to, right? So the bottom line here is the market's gone down. It could go down even further, right? This could just be straight up bearish. Who knows? We could turn around at the end of the first quarter or early second quarter, finally have that run up that we're supposed to have. That's possible. Obviously Plan B, stock to flow, hasn't lived up to what it was supposed to do. And there's different reasons for that, but really, again, none of this matters, and that's the point of this video. None of that matters. It only matters if you're a leverage trader and you're gambling and you have no strategy. Well, then you know what? You're going to lose. But if, on the other hand, you do have a strategy that you simply turn on your DCA buying when things go down, you buy a little bit every day, you never sink in just a large amount of money, then you'll be just fine in the long run. And so that's the point of this video. So the Bitcoin chart is still bearish. It's been bearish all week long. I even mentioned on Twitter that the volatility index in the stock market was high. Whenever the volatility index is up, that means that the market is going to be very rocky all week long. I actually thought it was going to nuke sooner than it did, but it did end up nuking just like we predicted, okay? So, that being said, the market with crypto is really closely tied into S&P now. It's really closely correlated. So when one's down, the other's down with it. And, eventually it will break through this. It will get past this point. But at the moment, you really need to be taking advantage of this, because this is the greatest buying opportunity you can possibly get, is when it's really low like this. Some of the prices I'm seeing out there are the lowest they've been in months. And these are some really good projects that, again, has anything fundamentally changed with any of those projects? Absolutely not. If anything, this is just even more bullish case for why you could be doing a DCA right now. So some of my DCAs, just to throw it out there, I've said it before, I do Polkadot every single day. I've been doing VGX every single day. I do Jasmy every single day. I bought some PDEX the other day. I bought some Trace. And there's some other ones like Kadena. I'll probably end up picking up some more of that one. I really like KCS. This is the KuCoin token. I like that one. I'll probably pick up a little bit there. I've even been buying some Bitcoin, which for the most part, I usually buy altcoins, but when Bitcoin gets this low, it's just too good of an opportunity not to. So, there's so many different things that you could go for. And really all you're doing is you're averaging down your positions, okay? So at the end of the day, this is where you really, really need to take advantage of what the market is giving you. So, an inexperienced investor looks at the market right now and says, oh my God, the sky is falling. I need to unload everything. My bags are so low, I'll never recover. And the experienced investor does the complete opposite, right? So it comes back to the Warren Buffett quote, right? So be greedy when others are fearful. That's kind of what we need to do here. So when others are fearful, we're being greedy, right? So that's it for today's video. Hopefully it makes sense. Just wanted to throw it out there because the market absolutely dumped yesterday. I didn't post a video. I had a long afternoon, just never got to it. And so I really wanted to do that today, just to kind of tell you, where I'm standing, what I'm doing. Am I still buying? Yes, I am. I'm going to keep on buying. That's what I do. I buy when it's red, right? So I'll keep on buying because that's what I do. I'm going to build up my positions bigger and better than they ever were before. And when the market turns around, I'm going to turn that DCA off. All right? That's what I'm going to do. So there's my whole strategy. Great. So if you enjoyed today's video, make sure to hit the like button. Don't forget that I'm also on Twitter at KIR Finance, where you can find me tweeting and retweeting on a regular basis. Check me out there. And for a friendly reminder, this is Jesse with Keeping It Real Finance, the channel that always has your back and tells it like it is. And I will see you on the next one. Later.